Good afternoon, guys. It's Dwayne the Trader, and today we have a little special video for the weekend. We're going to basically break down the intro into Forex. This video is mainly pertaining to people who want to get into trading and understanding what is Forex, because I feel like in any investment and anything that you want to do in life, you need to understand what you are doing that you want to do. If you want to trade stocks, you need to learn, what the stock market is. You want to trade futures, you need to know what the future market is. If you want to trade Forex, you need to know what the Forex market is. And the best way I think I could present this guys to you is to make a video. I created a slideshow basically breaking down what is Forex. And so let's go ahead and hop into it and let's get into this video, guys. I hope you guys enjoy this video and my presentation. So let's go ahead and get into it. So, Forex is the short form of foreign exchange market. It is also known as the currency exchange or simply FX. Forex is the platform where currencies are traded. It is the largest financial market in the world with a daily turnover of 5 trillion, maybe even more now. It is even huge even when compared to the biggest stock exchange markets. Of course, the retail forex trading, which you guys are going to be doing, does not make up the majority of the volume. The daily trade volume of a retail trader is around 1.5 trillion. The biggest players in the forex market, you must know. My bad. The biggest players in the forex market. You must know who the biggest players are in the FX market because they could change the currency rate in the blink of an eye. Traders who understand the main objectives of these players can make reasonable predictions about the future of currency moves. Do you know who Mario Draghi is, Janet Yellen, or Angela Merkel? They are just a few officials who could create chaos in the currency rates with just a few words in their speeches. Forex traders indeed plan their trades by analyzing the most recent economic news and geopolitical developments, as well as the latest announcements from the G7 key officials. So, who are the G7? The group of seven is the form of the world's seven most developed economies: the United States, Germany, the United Kingdom, France, Japan, Canada, and Italy. The main people to follow and listen from these countries are the head of the central banks, prime ministers, presidents of the country, and the most traded currency pair is the euro dollar. So the most influential person in the forex are the chair of the U.S. Federal Reserve Bank, head of the European Central Bank, and Chancellor of Germany, and the presidents of the United States. So I'm pretty sure you guys heard, I'm going long or I'm going short. And we're about to basically explain what that means. The main idea in Forex is to buy a currency at a low price and to sell it at a higher price. If you think the price of a currency rate will go up, you click the buy, and this is called going long. But if you think the rate is going to go down, you click sell, and this is called short. The process of going long is very simple, but going short in reality is a bit more complex. Fortunately, the brokers that we have, the complex is taken care of by automated trading systems. The shorting process happens like this. The broker lends you the currency that you want to sell, and when the price falls, you pay the broker back at a lower price, thus making a profit on the difference. All you need to do is push a button and the shorter happens automatically nowadays. Before it used to be extremely more difficult to short, but now in the new generation, things are a lot more easier. Things are a lot more technical. It is important to also have a good understanding to understand that you are not simply trading money in forex. You are trading economies of the entire countries. If you're buying British pound, you are in essence buying shares of the British economy. For example, you pay with US dollars to buy the pounds. You do it because you believe that the UK's economy will outperform the US economy. The price of a currency in reality is a reflection of what the markets think about the current and the future condition of its economy compared to other economies. Now, yes, the Forex market, or also known as the foreign exchange market, is open 24/6. It opens on Sunday and closes on Friday at 4 p.m. Eastern Time, but does not mean it's a good idea to trade all day. Here are some time zones to trade and the days to trade. London session opens at 3 a.m. Eastern Time and closes at 9 a.m. Eastern Time. The US session opens at 8 a.m. Eastern Time and closes at 6 p.m. Eastern Time. And the Asian session opens at 7 p.m. Eastern Time and closes at 2 a.m. Eastern Time. The most cash flow through the market happens when the London session and the US session cross over. So at 8 a.m. Eastern Time, right before 1 hour before the London session closes and the US session opens, that's when the most liquidity, the most volume comes into the market. The more cash flow comes into the market. So trading forex means simultaneously buying one currency and selling another, like I explained before. Currencies are traded through a forex broker or bank that they are quoted and traded in pairs. For example, GBP USD, also known as Great British Pound versus the United States dollar, equals 1.5323. GBP is the base currency and USD is the quote currency, and 1.5323 is the rate. The most popular pairs are those that include the US dollars. These pairs are called major pairs and they are traded the most often. Currency symbols always have 3 letters, where the first 2 letters identify the country and the third letter stands for the country's currency. Take AUD. For instance, AU stands for Australia and D stands for dollar. So on this picture below that you see, GP stands for Great Britain, and then P stands for pound because that's their currency, and then US stands for United States, and D stands for dollar. Hope that was pretty easy to understand. So overall, there are more than 100 different currency pairs, so one of the first decisions you have to make is which pair to choose. A general rule of thumb is to stick to trading the majors, but there are many traders who are successfully trading other types of pairs. But I trade mainly the major pairs, which are the Euro dollar, Great British Pound dollar, USD JPY, USD CHF, which stands for Swiss franc, USD CAD, which stands for Canadian dollar, Australian dollar, and then the NZD USD, which stands for New Zealand dollar. So those are, like I said, the major pairs that I trade. I do trade minor pairs, but not as often as I trade major pairs. So the 5 key terms each trader is supposed to know. So number 1, bulls and bears. To simply put in terms, if you ever hear someone say it's a bull market or a bullish trend, all that means is the market is going up. And if you hear someone say it's a bear market or a bearish market, means the market is going down. Pretty simple to understand. And so number 2, pips and pipettes. When you're in trading and you might see on Instagram or YouTube or TikTok, whatever you might see about trading, and you hear someone say, oh, I got 300 pips. What they mean is a pip is a price point, is the most important unit of measurement in forex. It measures the change in the exchange rate for a currency pair. A pip is 1 unit of the 4th decimal point in a currency rate. So for dollar currencies, a pip is 1 of 10,000ths of a dollar. For example, 1.2345. The 4 in the currency is the pip. There is one exception, however. All currency pairs involving the Japanese yen are quoted only in 2 decimal points. So 0.01. So on pip in the yen pairs is the unit of the 2nd decimal point. This is the yen is much closer in value of 50 to 1 of 100th of the major currencies. So 104.35, the 5 in the rate is the pip. So if, let's just say, for example, USD JPY was quoting 104.35 and it went up to 104.36, it went up 1 pip. I hope that was kind of easy to understand. So I say, pips are used as a reference for gains or losses. The actual cash amount a pip represents depends on the pip value, which is different for different pairs. You don't have to worry about calculating pips yourself. The broker software usually does it for itself, so you don't have to worry too much about that. A pipette is a fraction of a pip. In fact, it's 1/10 of a pip. So 1.2345, the fifth is a pipette. They appear as the fifth and the third decimal for yen pairs. And the currency rate. Some brokers use pipettes to allow tighter spreads. So that also going into number 3, spreads. For trader, the spread is the cost of trading. You can think of spread as the commission for the broker or the bank for their services. Let's say that the official euro dollar rate is 1.3000. If the broker sold you the euro dollar at the same price, he or she will not make any money. So brokers have to quote it slightly higher than the price that it is showing. For example, they might quote you at 1.3001. The difference between the official rate and the broker rate quote is 1 pip. This is called the spread. The higher the liquidity of a currency pair, the lower the spread. For example, you might find a 0.1 pip spread in the euro dollar, but if you was to trade the pound yen, you might find a higher spread because doesn't have as much liquidity as the euro dollar. Four, lots. If a trader could open a trading position with just 50 cents or $1, the trading would not be worth anyone's time, as it would take years to gain significant profits. Currency rates usually don't have enormous swings that could generate 100% profits in minutes or hours. So trading becomes productive only when deposits reach certain limits. The standard size of a lot is 100,000 units, based off the base currency. However, there are smaller types of lots for people who don't want to risk too much money. So a standard lot equals 100,000 units of its base currency. A mini lot equals 10,000 units of its base currency. And a micro lot equals 1,000 units of its base currency. So if you've been watching my videos, you might see 2,000 unit lot, or 1,500 unit lot, or 1,300 unit lot. I'm entering micro lots. Okay, so you understand what those numbers mean on my charts when I'm in positions. And number 5 is leverage. In simple terms, is the broker. What leverage is in simple terms is the broker lending you money that allows you to have more leverage in trading. Now in the United States only allows a 1 to 50 leverage, which means if you put $100 in, you really have $5,000 to trade with. Now, like I said, that's just the U.S. You could go outside of the U.S., like Canada or Australia or Europe or London, and find different type of leverages from 1 to 50 all the way up to 1 to 1,000. Leverage is very dangerous though, and can blow your account up very quick. So I do not suggest using heavy leverage, and it can ruin your account if you do not know what you're doing. And you can also end up on your broker back if you end up over leveraging and throwing your account in margin. So like I said, I just want to also going over again, a standard lot 1.0, like if you have an MT4 and you see someone entering a 1.0, they're buying 100,000 lots. If you see someone with a mini lot that says 0.10, they're buying 10,000 units of that currency. And if you see someone buying a 0.01 micro lot, that means they're buying 1,000 units of a currency. So you can understand, like if you was to go into your MT4 broker, which is widely used all over the country and outside of the country, when you enter positions, this is what you're going to see when you're entering positions. You're going to see what's on the left side of the screen. That's what's on the right. So there are also 2 main types of analysis that traders use to read the market and develop trading strategies. So You have fundamental analysis and technical analysis. So fundamental analysis is looking at economic, political, and social factors, things that can drive an economy, things that actually is a reason why prices go up and down. And technical analysis is a study of charts to spot patterns and different type of movements in the charts, such as Fibonacci retracements, pullbacks, support resistance, price action. Those are all technical analysis, while fundamental may be like, for example, China tariffs that the US was putting on China last year, 2020. That's a fundamental analysis. Versus technical is like you might hear someone say, oh, this is a double bottom, or this is a flag pattern, or this is a wedge pattern coming up, or we have a W pattern or a doji candle pattern coming up. Those are technical analysis. To me personally, I say traders need to understand both in order to become a well-developed investor within the forex market. So, like I said, going more deeper into what fundamental and technical analysis is. So fundamental analysis is the diagram on the left. This is where we come out like, the United Kingdom's gross domestic product. This stands for GDP stands for gross domestic product, which measures the annualized change in the inflation adjusted to value of all goods and services produced by the economy. So when traders come in and look at news or economic data, this is what they mean by fundamental analysis. They see like, okay, the forecast actually went down. For example, in this picture, for the United Kingdom, their GDP actually went down from versus what their forecast. So it shows that the economy is getting stronger, right? So people would take that into consideration and start to look for reasons why to trade the GBP, for example, for a GBP USD, to try to trade it in a long direction because they could see their economy getting stronger. And on the right, we have technical analysis, which, like I said, this is what you usually see all over the place. People like said, what you see here is a wedge pattern, a breakout, a retest at support, which is right here, right? You have a wedge pattern, you have a breakout, you have a retest at support, and you have a continuation, right? Those are technical analysis. And like I said, you need both technical and fundamental to to understand why prices are going up. The reason why we was having a wedge pattern, for example, let's just say this is let's just say this is GBP USD, and this news came out. Traders and banks are pricing in that news. News was good. It breaks out, comes down for a little retest. Traders enter long for a long position. They might have stops under here, targets up there, and they basically trade until that target get hit or their stop loss gets hit. So coming from a technical analysis, that's what traders will look at. But they also need to understand fundamental analysis to understand why this is happening. So that's pretty much it into forex. I want to say, I have my Telegram channel down in the link. I am making my own company. It will be released in 2022. I don't know exactly when. All I know is going to be the beginning of the year. But I want to tell you, I own a company called Dwayne the Trader Inc. And my goal is to bring valuable content and education while giving my fellow traders a strong backbone for support, as we're going to also offer chat rooms where you could communicate with fellow traders so you never go alone through the market conditions. And every trader has to go through their own challenges, but there's nothing better than to have a fellow-minded people help you along the way. So, like I said, right now it's not up and running, but I do have a Telegram channel that is completely free that you could go ahead and click the link in the description to join and follow my trade ideas. Like I said, there's no chat room right now. It's just me producing my trades and showing you my trades that I'm getting into that you can follow. But starting to next year, there is going to be my company that's going to be releasing. And you could join, you could come in, you could join the team, you could chat with other fellow traders, and you can also take our trade signals that we're going to be sending out. And so, like I said, I am working on that. That is in development. But as of right now, I just have a Telegram channel, like I said, that is completely free. Link is in the description. And y'all could go ahead and click that, join it, and be a part of it. And if you do that, when I do release the company, anyone that's in that group chat, anyone that's in my Telegram won't have to pay. Won't have to pay. And y'all have free access, lifetime access. But anything after that, like I said, anyone who joins after will have to pay. But anyone who joins before, as of right now, you don't have to pay. And you can get in free and you can enjoy that free content. So I believe that's it, guys. I thank you for watching my intro into Forex. I hope I was able to break down the understanding of what Forex means. And I hope you could take this information and watch this information back again so you can make an educated decision on what you want to do in your investments with your money. So like I said, thank you for watching my video. My name is Dwayne the Trader, and I'm out. All right.